why? Market's so wild that what am I chasing here, right? So that's when good traders go, let's just sit on my hands. My account is literally 90% cash at the moment. It was like that. But even with that, even with minimal positions I have, I'm experiencing a drawdown because these stocks are moving so wildly. Okay. We'll talk about quantum, what I did. Actually, I made my money back. I was short Rigetti, actual shares covered, took a loss, 10K loss, then got into RGTZ and made probably 70-80% of it back. But stock like HIMS, let's say today, they're just getting taken out in the back and getting shot after making a reaction high at 62 a couple of days ago. We're at 50. Look, this is not normal. Okay, stocks don't move like this. Although VIX has pumped up to 24, 25, individual stock volatility is so much more higher than the index volatility itself. And even if you were to hedge yourself unless you do the futures, but even if you do the futures, look where we are. By the time the market opened, we were unchanged. 90 handles were recovered, 400 points on NASDAQ was recovered. From red to green. How does that work? That's because markets are thin. Maybe there's not much liquidity overnight. I get it. But the point again in all the stocks, indexes, stocks don't move like this. There is something going on that I'm trying to put my finger on, but it just doesn't make sense. So when it doesn't make sense, great traders know how to sit on their hands. You just sit. It's okay. Let it come to you as opposed to you chasing something. Because we're all, not me, but and hopefully not my group, but these newbies are all so pumped up that they must do something every day. No, man, you just sit. You let it come to you. And if it doesn't come to you, don't trade. You don't have to. I'm a swing trader. I'm not a day trader. Thank God. I tried it. I don't think anybody can be successful day trading because the odds are against you. So how's that? Math is pretty simple. I mean, you can't argue with math. You can argue with me, but you cannot argue with math. Yeah, you'll have a couple of good weeks and then one big, tweet and you're on the wrong side. By the time you get stopped out, by the time you reverse, by the time you do that, you got your face ripped and you're gone. Account's blown. So 54% of the time, on a daily basis, the market is green. 54% of the time. Okay. This is facts. You can go Google it, Gemini it, Grok it, whatever you want to do. Take the commissions out. Take the slippage out. That's the difference between bid and ask. For all those day trades you're doing, you're at 50-50 day trading. It's a coin flip. I don't like coin flips. So I swing trade. I position trade. But again and again, when you up at 2 in the morning and you see SPX down 90 handles and NASDAQ down 400, you're getting ready for a bloodbath, right? And I do have positions that would have gotten hurt, but they are getting hurt, God forbid. What would have happened if we open down 90 and go down 180 on SPX? There's a possibility, these recoveries are all happening and people are just getting very comfortable with buying the dip and getting used to it. It's all good. But my point in all of this is I don't want to chase return. I don't have to. And, put the position on when it's there, not because you're bored, not because you have to do something, not because, okay, you from your all-time high, market's down 2%, but your account's down 20% already. You know what that means? That means you're oversized. That means you're leveraged, most likely. And so what will happen to that account if market really sells off? Maybe market sells off 10%, which is normal. Garden variety sell-off. If you're down 20% with 2% from all-time highs, what's going to happen to your account? Because you're holding, right? You just go, okay, the one day it'll go back up. And then it doesn't. And then it goes down another 10%, down 20%. That account will just go down half or more. And after that now, you need to pray to market gods to save your ass again and again. But the math, again, is against you. If you have $1 million account, goes down to 500,000, you're so committed and you're so convinced that the stocks you're holding are going to take you to promised land. Okay. So your account goes down 50%, which it did in April. A lot of accounts went down 50, 75%. Because these stocks are wild. They're 2, 3, 4 beta stocks. Okay. Now what? If your account goes down 50%, your account has to go up 100% to just get back to where you were, to back to even. Okay, that's math. Math is math. But then again and again for the last 30 years, market has saved folks.